Okay, how are we going there, guys? Happy Monday. I was going to say Merry Monday, but it doesn't make too much sense. Hope we had a good weekend. We also managed to get some time just to unwind a bit. Now, just let me know if you can hear me loud and clear. And then we'll get up and racing. So we got Paul. G'day, mate. Always depend on you to say hi, mate. Alrighty, let's get going then. Welcome to Trade Setup in the live stream. It's the 4th of June, so getting on to the end of the financial year, which could see a bit of argy-bargy in the markets later on, but we'll see how that goes. We've also got anyone trading the SPY futures, what is it, the third Thursday, so that'll be this month, and could be 2 weeks from Thursday maybe. So that's futures will expire, so you get an extended open there on the ASX. I just thought I'd say that while I remembered myself. All right, so the US. Well, actually, let's take one step back. Welcome to anyone that's new. You got the trade setup. You got a general advice warning you'll see just about here. Just take a bit of a read of that. Top left-hand corner, you can see that you can join us on Twitter. So we do put out bits and pieces, and we do retweet stuff that we follow that I think is quite relevant. Just follow us at trade_. Make sure you put underscore setup. I think you get somebody else if it's just trade setup, some Yankee mob. You can join us on Facebook. I mean, that's not pretty much whatever's on Twitter. We do occasionally put stuff on Facebook there, but most of it will be on Twitter anyway. And subscribe to us on YouTube, the bottom right-hand corner, and we'll get some interesting stuff going. All right, enough of that. Let's get the market up and running. I'm just going to remember I've got to change that, don't I? Yep, there we go. So the US had a big night, had a good night. I don't know if anyone followed what happened on Friday night, but it was a good end to the week. A good strong end to the week for the US. There's a couple of good things. Again, you've always got this rubbish news banging around. Not rubbish, but again, the markets tends to I think it's brushed to the side. It's more just a trade war concern, and they're talking about retaliation from now. What are the US have put tariffs on aluminium and metals or steel, sorry, and I think they're waiting for potentially Canada, the EU, and maybe was it Mexico or Spain? I think it was Mexico that could put some tariffs of their own and retaliate. So that's always that sort of talk that pops up, the fear mongering talk that pops up from the bears. But I think that on Friday night, the market's pretty much brushed it aside. I think again, they just sort of, it's moved the markets in the past. The more this goes on, the more muted the actual, more muted the results are, or reactions to the news. The big news that pushed markets higher, which was quite good, was that payrolls came out more positive than expected, and I think their unemployment rate dropped in the US. I don't know if they weren't expecting it. It was 3.9, I think, dropped to 3.8, and they were expecting 3.9 just to stay at that range. But payrolls come out, they were expecting up 100 or so, and there was up 250, so quite a good result. But I think the key thing that they're looking at over in the US, which is why probably the markets have kicked on a bit, is that what was I going to say? Geez, that was a quick blank, wasn't it? Is that the jobs data hasn't kicked on, like average hourly earnings is not going on that strong, which means the inflation pressures is well contained. So I think if it stays well contained, there's no reason why they should be factoring another interest rate rise. So I think the US did bounce around a bit because people are they're waiting for that bigger kick for inflation, but it's not coming about. Stocks, which means stocks are taking it on board quite well because nothing's really changing in the future, that everything's been factored in. Maybe the US dollar is going to bounce around as people who have factored in less or more, they get out of positions and it sort of chops and changes. But that's more, I think that's just going to be sort of range bound and contained a bit at the moment, the US dollar. So yeah, that was sort of the theme of the market, which gave it a good lift. Bonds did kick up. I don't know if anyone saw those. The bond yields kicked up, bonds dropped. But I don't think it's too bad because they maybe were trying to over factor in another rate rise, and that's why they kicked on above that 3% mark that we were looking at. But the fact is that inflation have contained things. Sorry, I just saw something pop up in the news. No, I might be tripping a bit. Anyway, um, where was I? Where was I? I think I've lost my train of thought again. I might have to have another coffee. Anyway, so US had a pretty good night, pretty decent night. So that, I think shares are looking at it being everything's sort of factored in. Nothing's going to be that with the bonds. That's right. That's where I was, wasn't I? Higher bond yields. I don't think they're going to tick up to 3. They might just sort of be held below 3 as there's not any really need for interest rates to be ticking up. They did factor it in, but when they pushed above 3 and they were straight back down again, they come down pretty hard. So I think that news, although it was good, it's still not too inflationary. So I think that's the big point to take out of the numbers on Friday night. And I think you saw that more in the market. Good strong rally in the US, and they sort of brushed aside that bad news. Not bad news, but the typical trade war news that it normally caps the market a bit. But then again, I mean, you might see that it does the usual. They have a big night and they have a couple of down days. So it'll be interesting to see tonight if they can hold on to the risk. And by saying that, I mean everyone's jumped back into and took on more risk into the equities market. So what they have been doing, a big night, they'll all rally up. You get the intraday traders that push it up. They might hold it over the weekend or over the night into the next session and sell out again if they see any sort of sign of weakness. So a lot of this sort of chopping and changing. No one's really willing to hold risk for too long. By risk, I mean taking on bigger size or bigger positions, jumping back into the market when it is looking a bit overcooked. But what we'll do is take a look at the markets now. I actually don't think they look too bad in the US. It looks quite good. Start with the broader market S&P. Look at that. So we've spoken about that. It's potentially this is going to be a higher low, and it won't take much to break up through these highs through that 2750 mark, and then you're pressing on the 28. So that could be another good night tonight. And if we do get a good night tonight, I think it'll be quite a positive sign because it'll be even if it's only up 50 to 100 on the Dow. I think that's a fairly good night. It looks like there's more risk put on. People are willing to hold their risk if they did load up on Friday, and I think it'll be quite a positive sign that tack that onto the back of a break up through that 2750 or so. I think could be quite good. The Dow is looking slightly different, but that's the top 30. The Nasdaq had a big night. They never really headed south the last few days. Every time there's a good kick up on the markets in the US over the last week, they went on with it. When there was a pullback, they didn't pull back as hard, so they did perform. They did outperform the other two indices, the Dow and the S&P on Friday. So that the old tech market, the tech sector, is still pretty strong in the US. So it's given us a good boost today, but I think it's more your blue chips. The banks are looking okay. They've had a good kick up today. Well, that's premium. Just looking through there now. Is that the full? It's actually down from the open. Be interesting actually. It's interesting to see the way the banks are reacting. I mean, they've all opened up stronger. Actually, I'll give you an intraday view. Just got some more charts over here. So these are the banks intraday. You can see they've gapped up. That's ANZ. That's gapped up and then sold back down to pretty much below the close of Friday. NAB's holding up all right. It's gapped up, but it's holding on to some gains, only just under 1%, which is not too bad. With ANZ has put it closer to break even. The same with Commonwealth Bank. They've actually gapped up and then they've made I mean, not they're going to be closing that gap in there, but it's not looking quite as strong. This could be a lower high in here. Then you press and take out that low. You're working your way back to the Friday's close. Westpac's looking a little bit better. Again, gapped up quite strong on the open and it's been sold into there, but we'll see if we can, form this sort of rounding bottom in there and push up into the close today. So we'll just see how that plays out. That's the banks. I found them interesting to watch them intraday just to see how they're going. All right, so we've got here, that's ANZ. Let's go back to the Dow. The Dow's still looking good. And the same, just what I missed to say, look at the stochastics. They've had a good little pop down to 50%. So the selling pressure tried to bring it down, and they really just got down as far as 26.75. You see that higher low there? And then they've had a couple of good days back up, and it looks like they're going to have a bit of a tear. I mean, if you see the way they've reacted back up, it's straight back up to pretty much these previous highs around 27.42. At 27.42, where did we close? 27.36. So it's 5 points shy of those highs. That little minor double top in there. And we spoke about this. We said this the other day when it was banging around, chopping around here. You probably expect this just to get taken out, which it did in one day. The next day it was back up again. It's just cleaned out that 2700. We bounced back, and you can see the way the stochastics. It looks like the buying pressure is quite hard. Um, it was quite good, and it's really soaking up. So it looks like it's clearing out of that sellers. The seller getting cleared out of the way a bit. So it's not quite as strong. They're not putting up much resistance. So if we can, if this market can press up from here through 2750, that'd be ideal for us as well. The ASX. Now the Dow's had a bigger drop off from overbought to closer to oversold, and it looks, you can just see by the stochastic starting to kick up. Not quite as nice, that chart, but again, that's still positive. You can see this move. Lower highs are pressing in, and recently we took out this recent lower high at around a touch below 25. But you can see it was getting rejected from this sort of 2350 to 23750 zone. It's 250 points, but it's getting rejected off there. It's traded down, bounced up quite hard. You'd expect that after a major sell-off. Major reaction back up again. Good sell back down to that zone. Okay, buyers are stepping in. Buyers are constantly stepping in around this zone. And that's probably a key one. That's good rejection and more or less a higher low. And I think we're in a prime position now. If we do take out this previous high at 24,714 or 715, and we closed about 30 to 40 points below that. If we can take out that the next day or even tonight, I think it's early days, but probably we're looking at that as being a higher low. And I think that being a higher low, you'd expect the 2500 to be taken out. And your next level's around 2550 and then sort of up towards 25750. But it's looking good. We've spent a lot of time just confirming this base and holding this base. Couple that with the news of inflation being kept intact, kept in line. So kept in line. That should play well for these markets to head higher a bit. The XJO, good day today. And that you can see the last few days has sort of been not contained, but oscillating around above and below 6,000. A couple of rejections. You got this day here, rejected low down there, positive day, back down to retest, and that was a minor high low in the previous 2 days ago. So what was that? 30th of May. It was about Wednesday, I think. Wednesday, Thursday, Friday. Yep. So it was Wednesday, made those lows, rejected them on Thursday, went back down to retest them on Friday. And that you would have expected that coming into the payroll figures, as a lot of people just sort of, anyone that didn't want to hold risk too much, and you got the payrolls, you never know what's going to happen. They're just squaring up positions, closing out, good payroll. So you've triggered that market to kick higher on Friday night, and it's dragging us up today. So it's quite good. That looks quite positive. I do like on the daily, it's been some good selling pressure in respect to where we got to last time, around 57.50. Potentially we're going to hold up at 59.75. So for me, that's a nice little sign. Look at the weekly charts. If we can do that and spend a bit of time just confirming that, that we're going to push up, maybe not all this week, but it'd be nice if we can do that. I think we're going to target a push up through that 61.50. But again, we'll just have to see. It's also, to me, it seems to be lining up. The US is lining up, and obviously when they're doing well, we're doing well. We're getting a bit more positive. Maybe, what have we got? Metals might start to pick up a bit. Commodity indices, it's been edging higher the last few weeks. I don't know if anyone looks at the CRB index. Yeah, that's been edging okay. It didn't go too well on Friday, but that was been edging up. That could help us out. I don't know what the Aussie dollar's doing. I haven't looked at that. We'll look at that in a minute, actually. All right. Anyone else got a different view or any other views on that? The FTSE, that's a FTSE there. That's backed off from the highs, which we would expect. We're on a weekly chart there, so they had a good day on. I don't expect that to be the same sort of reaction as, say, on the ASX. I think they've had too good a run up there, and it was really a big washout. If we do come back up to 78 and retest it and start failing off there, I'd expect that secondary leg lower. So 79 down to 76, another 300 points, somewhere around 75. If that's the case, or we might overshoot that to 74, but that's just on the FTSE. It looks like it is going to pick up from here, you'd expect, but if we get some selling pressure and it just edges up to 78, which is where it broke out through this high, it just washed out that high. may retest that and fail, and you've got a lower high, and you'd expect that to take out the 76 zone. DAX looks a bit nicer to me, a bit cleaner. The thing is, on the weekly, we're still rolling over on the weekly. It doesn't mean we can't just chop and change, hold up sort of at overbought territory. On the daily, we've gone from overbought to oversold, so the pressure's been down, but it's been held up. It's been soaked up by the buyers. So yeah, it's just whether or not this is what you've got to look at. So I don't know if anyone, as long as what I'm looking at here, just on the DAX, for any DAX traders really, on the weekly, it's two things. What we're trying to see is this: if this is going to be, this is sort of my key level through. Oh, it's too big, isn't it? Let's just take a step back. Let's just get. For me, this is my key level around that 1200. So I'm just keeping an eye on this to see if that's actually a bit of a washout of that level. I mean, to me, it looks like a bit of a washout. But then if it's a washout, I would have expected a bit more, not this solid move up to 1300 on the weekly. So if that's a washout, and then I'd expect some more contraction. I expect a high low to build, potentially around 12,250, 12,500, which is just edging down there now on the DAX. Build a high low and then to pick up. If we get too much contraction, this could not be a washout, and it's more of that break of that region. We've bounced back up. We built a major lower high in context to the previous level through here, and that's a washout there, don't forget. So we've popped up, pulled back, built your high low, wash out the high, capitulated, then just cleaned out this low as well at 12,000. So it could be the start of a decent leg down. Just have to keep an eye on it if you're trading the DAX, but it can, it's got the potential just to get really choppy as well. I mean, that's a bit different to what I'm seeing, what I like to see, what I would like to see on the Dow and the S&P. It's looking a bit cleaner on the Dow and the S&P, a bit better set up. But we'll just see. The last few days, don't forget, over in Europe, you've had the problems with what is it, Italy and Spain. Maybe Spain's still got a few issues, political issues, but I think over in Italy they've managed to form government and take that pressure off the market. So we'll see if they can hold up, and that we can see a lift of buying and see that buying take it back up through 13.2. Just have to keep an eye on it the next few days. All right, that's probably it. Let's jump into putting anything that you want to look at, just chuck it in. I just want to go over. I thought I might just pop up for something different, look at a couple of currencies. I've got my eye on. I don't know if anyone trades currencies. I've got a couple of stocks too. This is one that I've been looking at for a while, and I've had a good announcement. Kogan. Does anyone look at Kogan? Has anyone got Kogan? I'm expecting that to push up through 10 now. Get a bit of a kick on. It's up 6% today at the moment. What we got here? So it's just this price action. You can see pretty much from when it started kicking up. This looks quite good, and you've had a good little clean out too, which is very handy. You see the trend is still up. We got close to retesting that lows, and the key sort of anchor was around, around that zone as well. What is that zone? It's around 650. That was your anchor at the time when we pulled back. You've had that 1, 2. So, I mean, that wasn't a bad little zone to go down and retest. It's holding this trend higher. But now we just seem to be breaking out through, it was just above 950. I think it was about 950. Just breaking up there through there today after we've cleaned out this candle here. Cleaned out a lot of these buyers, a lot of the buyers that had it for a little while, they would have been feeling a bit of pressure there. That's why it's very important to know where your levels are, where your key levels, and what you're looking at, and what sort of price action you're seeing, because the market's going to do that time and time again when the market takes off. It's kicking up, it's quite positive, and then you get a little run up. It gets probably a bit ahead of itself as you get the MAs starting to curl up, and then you get these two moves down, and people will just look at this purely and simply because it's got a lower high, we're getting out, we're bailing, but it's in context of that anchor. You've always got to put it in context of the anchor, what's happening. In this stage, the trend was still high. It's only really coming back to sort of that reversion to the mean style of trading. So that there is pure and simply made to just clean people out of the market, get them back on the sidelines, and then start to build again. You can see that we've had a couple of good weeks up, And this is the ideal thing. We get into the daily. What I like at this sort of chopping, I probably want to drill down that a bit more. It's a very handy little thing just to see the way it's bounced back. It's something to take note of. We've had, so at that stage, we've got a clear resistance zone through around 950. You've had this two-legged move down, which we like to see, and bounce all the way back up. So if this is a weak market, you shouldn't be seeing this bounce straight back up to that resistance at 950. That's capitulation. People have been cleaned out there, and it's just bounced straight back up again. So it's that sort of V-shaped recovery. Now, if this is where, I mean, it could have been a double top, then what you would expect in that case is another lower high, and then you start attacking through those lows, even if it's going to range trade around 7, or it just takes it straight out again. That's if it's a weak market. Instead, you've seen, let's go back a step, we've just seen the market sort of bounce around. The good thing is, what I did like is that you can see it's just popping up just below 950. It touched it a few times, but it just could not get through. Excuse me. It could not get through. What a market will tend to do time and time again, you don't forget, it's based around psychology more than anything else. If you bought it in here and you're looking for that break up through here, a lot of people may buy it early. They haven't got the confirmation it's going up through 950 just yet. It keeps triggering and they look like, okay, excuse me, I just have to have a drink. So the psychology behind it, you get these buyers that are trying to buy it in anticipation it's going to break, especially after this nice little V-shaped recovery into that resistance zone. But it hasn't quite got there. It keeps ticking up, ticking up, ticking up. What it's going to do eventually, if you bought it in here, or if you bought it late in here and you're looking for that big break up, and then you know where you're going to set your stop. This sort of move here is just probably just cleaning out. It's taken out the recent low. It's cleaned them out. A lot of these buyers in here, if they are running stops, of course, if they're not, um, yeah, I'm not a big believer in anyone not running stops, to be honest. But yeah, okay. So I'm just reading something that's popped up on Twitter. So I have that going in the background to see what news is coming through. There's always a few good people that it's worthwhile following that are right onto it. I'll let them do the hard work. So this move here just cleaned out that low, and then you can see the way the next green candle, the next day, bang, straight back up again. And it had a couple of days where it's actually taken out this little 925 zone a couple of times. It has rejected. Okay, that's great. But all this price action, you couple it all together. First, you got this big washout. The way it's come straight back up again, and then it's chopped around here. There might have been something, being the news that was out today, there might have been that just somebody's knew something and then just antsy to get in, and then they probably got it wrong. They just want to get back out again, just to take off the risk off the table, reassess it, and it's bounced straight back up. They might have been jumping back in here. You don't know what's going on, but all that price action to me, and this holding around around the highs, sorry, all this price action pretty much, well, it was the best part of last month, wasn't it? Last month, holding around those highs with this little clean out here, and the way we've rejected it straight again after all this price action has been put in place, that's a good little buy. I'm not going to jump into it just now because I think it could be a tad late. But if you're going to look at that, I think that's quite a strong kind of price action to keep in mind. I think we're going to take out that high. That's what I would expect anyway. I thought I'd pop that out there. AIA is another one that I do like on the weekly. I've got our eye on that. You can see that's probably a bit similar if we draw that up. I'm a big fan of those two moves, just to clear the way a lot of traders. So anyone that's late into the trend, they might have held it through here, and then you've got this move up, and especially with that little washout you can see up here, and then we've headed south on the secondary move down, taken out that low. Then you can see we've come back and retested, and we seem to be holding. So there's a clear sort of a resistance zone at 625. It may just have to do a fair bit of work, just chop around in between there, but I'd be inclined to believe that it's going to hold at 575 because I do like the way it's pushed down, cleaned out a lot of these late buys, maybe cleaned them out. The cycle, well, excuse me, the idea behind these two moves is a lot of people will. I mean, they'd be happy to hold it. If you bought it late here, say you just bought it with a breakout through 7, a lot of people in stocks just do not run stops. They don't. They just tend to leave it open. I don't know. I don't know why, but coming from a background of futures, you have to run stops. You should do anyway, because you can really get cleaned up with the leverage. Whereas stocks seem to just have a slightly different mentality. So I think anyone that's sort of holding here, this move down, A lot of them may be feeling the pressure here. They may not have closed out. You might find a few did. They might have it quite tight, going, okay, I know it's broken up through here. It doesn't follow on with it. I'm going to get out here and just reassess it. Whatever the case, this move down. Anyone that didn't is probably bought it through here, feeling a bit of heat through here, and it's come back up. They go, okay, we're good. We're looking potentially getting back out at break even. It's done this. The second time around, you do expect that we would not want to take the heat, because if that's holding up, you've got a major lower high through here, through at 7. Anyone that's looking at it from a technical basis, this move down is probably going to clean them out. So it's cleaned out a lot of these earlier buys from 2016. But now it's spent a lot of time. It's retested this low at 575, or this support zone, after this little washout. So I find that a really good technical setup after all this sort of clean out of those late buys to that trend. So it's doing a lot of work, but it's doing it at a nice higher price. If you can go back to the weekly, you look at that. That to me is starting to show some really nice signs. It may have a lot of work to do still. Put in a bit of leg work to just consolidate a bit, or just squeeze in, contract, lower highs, higher lows, and then it'll pop. You would expect it to pop and take out these highs at 750. But I think that's one just to keep an eye on. Lauren, how are you, mate? Did you miss anything? You missed all the best stuff. Just to let you know, mate. Where's CCA? 89.5. Well, we're getting there. Right, so that's those two. That's what I was just going to take a quick look at. Anyone else, chuck into chat if you want to look at something. Just whack it in the chat, put the code in, and we'll get stuck into it. I just want to take a look at those currencies, two of them in particular. I think just the importance of looking at the high time frame zones. This is probably the reason why I like to go over the currencies. I think they're quite good technically, and it's worth looking at. Look, it's on currencies and futures and things like that. If you really want to improve your technical skills, it's worth just going through and seeing what they do and seeing if what your style is matches off. To be honest, in equities, it's a bit easy to be. Technicals are a bit easy. They're a bit cleaner. They don't play around as much. Whereas a lot of the time the currencies do. They'll wash out before they run. They do this. They have deeper corrections than people expect. So to sit there, and if you're not consistent with the way you trade, you're not consistent with your setups, you can get cleaned up, and that's probably the biggest problem. And that's why it's good, even if you just go through a markup or you just paper trade, just get onto a demo version of any platform, potentially ours, any platform, and have a look, and just have a bit of a play around, because it's gonna, one thing it will do is start to get you to focus on the right areas for your technicals, and really start to refine. And that's never going to hurt your, if you're just purely trading shares, it's never going to hurt. You start looking at it a bit better. You start looking at key levels better. You start noticing what action you want to see. If you do look at stochastics like I do, what are the stochastics doing? For example, right here, I don't really want to buy because stochastics are way overcooked. I'm looking at the bigger structure on this one anyway. But yeah, it just gets you just marking up different things and really refining your techniques. So we've got the US yen here. We've probably gone off this for a while, gone over this a while ago. We've got this major move up, and this is all probably show up in the weekly. It might just near the daily. You can see this major move down, major move up, and what we're doing here is more contracting. Looking at this chart, I'll be biased up. Longer term, don't forget we're looking at the weekly chart. I'll be biased up, but that's not the trade I'm looking for just at the moment. I'll go through that in just a second. But it just gets you looking at your key zones. Okay, you've got your key zone up here. That's where your swing level was. Push down, pop up, swang from here, swang, roll over, and you had this big push down to about 80. We corrected off there, spent a bit of time chopping around there. Then we corrected all the way back up again, pretty much non-stop. Boom, straight back up, cleaned out that level before we got some lower highs. And you can see that's always a good thing to note. They will clean out a key level a lot of times. It's very rare that currency will go, you've marked up some key support resistance zone, they'll just clean it out and go straight through. Very rare. So if you're going to buy, if you're breaking out, buying on a breakout there, you expect to take some major heat. So we've got a bit of back and fill in here. Let's pull back, come down, found a little support zone around 100. So go right back down to the daily. And I think that was around here, wasn't it? Probably a mile off, actually. Okay, yeah, that was it there. That's about 100. Bounce back up. Then you got some further contraction. So you can just see it's reacted straight back up, and then it's contracted back, found a bit of a base, and you got that and it's really just gone sideways for a long time when the trend line's caught up to it pretty much, and then you started forming some lower highs. You got this secondary move down. But what I'm looking for here, we've got potentially it's coming back up to that resistance zone. It's fallen a bit short, so what I'm expecting is a decent pullback, potentially down to somewhere around 106, 107 before we start building that higher low in context of this second two moves down. So there's something we always talk about, one, two, then you're looking for a higher low and then a pop up. The fact that it's fallen short of this, it could have gone up quite a bit more to 112 instead of got to about 111.30 or so. Instead of 112.50, it could have popped up there, retested, and then I'd be a bit more biased to the downside. But at the moment, it's fallen short there. And what it's going to do is sucker in a few more shorts, I would expect, a few more sellers, and then start to build a move potentially to break up and out. Because longer term, the US dollar you'd think is pretty bullish. Over the longer term, as they're raising rates, there's no way around that. But if they start raising them faster, yeah, it's going to be more bullish. If not, I just feel that we're starting to find a base on the US dollar. I mean, that's a pretty broad range you can trade in anyway. But what I'm looking at for this price action, you've got this leg up here. I'm sort of focused in on that leg. You've got the 4-hourly chart. So it's all in context. You've got this move down, your secondary move down, fell a bit short of where I was projecting it. We popped back up. Again, in context of this, we've fallen a bit short here, so I'm expecting a bit of back and fill, maybe that secondary move down. And that's pretty much what I'm looking for at the moment. So what I'll draw it on the other chart, so it's a bit easier. Oh, that'll do. All right. So what we're seeing, we've got this move up. It was broken here. So you got your first leg down, and this is a key thing. It's broken that anchor, and it had to go all the way down. You could have got a short in there. Wouldn't have thought it was broken that anchor so well, but that was a clear break of this anchor around 105.50 or just above 105.50. It's reacted back up again, so we might get this sort of reaction up, and then what I'd be looking for from here is that lower high, and then break down, and then what you've got there. You've got your high here. You've got a major lower high with a minor inside lower high, and then I expect that we're going to get that secondary move down, which is essentially that. And you could get somewhere to 106 before we start getting another buying, and then you're looking at potentially a major higher low in here. But either way, we've got our price action. We know we've put in place, and you can see you worked from the weekly down to daily, down to 4-hourly, down to you can go down to the 30-minute for your entry. I like the 4-hourly. If I'm going to short this, I'll be looking off the 30-minute just to refine the risk off your lower high. But you can see how we pieced it all together, and it really now it's just sitting and waiting to see if this plays out. I mean, if it doesn't, so be it. It doesn't really matter. But I think this has got a secondary move down, and if we get it somewhere around 110, we're not risking too much. You potentially got it down to 107. That's what, a couple hundred pips. So it's worth just taking note of these, marking them up in your charts. You can get them on TradeView. Just set up your currencies and just play around there. You can get them on our Trade Direct platform as well. Just play around on your currencies there and just practice your techniques. I do trade these occasionally, so I think it's quite good. It's good for your technicals anyway. But we'll see. We'll keep an eye on this one to see if this plays out here. The other one I liked, I was looking at just recently. I did miss it, to be honest. I just want to go through that quickly. Was it Aussie Kiwi? No. Sorry, the Kiwi US. And the basis behind that, you can see it's quite clear. Let's get into a daily actually. You got this sort of major support resistance that was oscillating between the two. Now we've come down, found support here, popped back up, retested the highs, even washed out those highs slightly, found some resistance, reacted off that zone, but come all the way back down. If it was positive, you'd build a major high low here, then boom, up we go. Instead, we've come all the way back down, found some more support at that zone. Then from here, actually, it probably doesn't really matter what we're saying here. We popped up, built a lower high here, and we've come, that lower high has led to this major sell-off all the way back down to that support zone. What I was looking more on the 4-hourly chart was really, we know that's a key zone there, and then we started forming this inside high low. So what I'd be looking for here at that stage, I missed it to be honest, was you've got that one move up, you project that up off that support, and you can get a push up, and you're just marking all this out, and then you're really just breaking it down to the lower time frame charts to see if this is going to hold. You want to see a higher low. I wonder if we got that. Problem is we didn't really get it. This is what I was looking at that stage. I wouldn't have minded popping out, pulling back to build a high low, and then give me the entry off the 30-minute chart. Instead, we just got this major pop straight back up. So at that stage up here, it was a bit harder to trade. I still think what I'm looking at for this now is more two things. If you go back to the 4-hourly chart, if this is just two legs up and we contract, we might find that we push all the way back down and we really have a deeper correction straight into this support zone. But if not, this could be part of a two-legged move again. One, potentially, oh, we just blasted straight up, have we? Well, that blew that out of the water. If that's the case, and we start, because you can see we're well overcooked on the 30-minute chart up here. If we pull back and build a lower height, this could be the start of a secondary move down, which could take us down to, what is that, about 69.44. That could be part of that move there. So which is a decent correction of this leg up, and then to start to build, a major leg higher and really start to push up off that major support zone, which is right down. It's a bit lower than it, isn't it? It's down here around that 68.50 mark. So you can see I like the currencies, and you have to put a bit more effort just to get the overall picture going. Just flicking around your different charts, so it gets you used to looking at different charts anyway, the different time frames, how to piece them together, what's happening overall, and building that picture. So you really get that understanding what's happening on the bigger picture and how you're going to trade it on the lower time frames. I like look at the weekly, daily to build the bigger picture. I like the 4-hourly just on the currencies anyway, just to get so you got enough oomph in those moves. So when you do get on the right side of it, it's going to go and be a decent move. And then just only because I don't like sitting up all night, just looking down to those lower time, maybe 30-minute charts, just to see if we can get some good bounces and good plays. Anyway, guys, let's get into the shares. I hope that helped. I thought it's worthwhile just talking about currencies because they're good just to practice your technicals if you're into it. Now, let's get into our shares. BKL, that's going okay. We're taking a partial on that one. What was the other two we've got? Bot. But okay, that's popping back up today. We've got out of that 19. You can see the highs there. I think that's going to continue on. May take a bit of time resetting itself up here and then have another run up through 20. It'd be great to get that into new highs. ATS is another one. We're still holding on to those gains there at the moment. I don't think we've taken a partial on that one, but we'll be watching that one closely. So therefore, and Whitehaven's looking quite good today. You can see this good blast up to 550, good pullback, sort of retesting the previous highs, that breakout from that previous high around 5, and then we're back up again. So it is looking, for me, that move up was quite steep. You'd need that sort of steep correction here, but we might get it sort of chopping around and building a nice little base to project it up and through 550 into new highs. And then really it's, come right back to the monthly. It could just tick up to 6 and above. But that's looking good at the moment. Now what do we got? Let's get on to here. Who was first? PPS. Just triggering off today. I haven't been watching PPS for a while. Premium, anyone that doesn't know it, they do like financial planning. I know platforms to put in your stocks and just I always forget what they're called, but they've been slowly putting onto their platform more and more funds under management. So they're doing quite well, and I haven't looked at them for a while, but when I was looking at them through these moves up through 2016 and 2017, they were doing really well. And they've come out with another announcement. They've increased funds under management, which is always good for them. They get a little cut of every sort of transaction that goes through. Doing quite well. So the good story behind them. I think fundamentally, I just didn't like them up here. You're getting to that overcooked mark in the weekly, and that's a lot lower than that. Excuse me, that high around 12. It's had a good deep correction off here, reversion to the mean. The good thing about it, your anchor is around that zone around 55. You can see it's come all the way back down, retested pretty much the anchor on the weekly chart anyway, and it's reacted off there. So you really got to go down to the dailies now. That's your 55. Pretty much it found support off there. We've reacted back up. But for me, this is your key level on your down, sort of your down move. I'll get that there. I'm not too bullish on this, even though we've had a good day today. Just at the moment, I want to see some more work done on this. So that's one move up, move up. That's your secondary move down. You found some good support through 55 to 57. I've probably drawn that up a tad wrong, even through here. We've reacted off there, but the thing is, this is the anchor to this downtrend. We've really just, we're right up there now, and we've just sort of washed that out. I don't like this sort of move up, and then we've reacted off there quite strong. And these days of doing nothing, you can see the tails on that. That's always a bit of a sign where selling's coming in, selling's coming in, selling's coming in. We have popped up today, which is okay. Okay, we might just be retesting that zone, and then we might continue. We might start to fail off there with some lower highs, which I don't find so bad. I wouldn't mind cleaning out. This could be a lot of work's been done here. The buyers are trying to lift it, and it may not quite get there. Then maybe they just give out the ghost. You have this deeper correction, maybe to 62 or between 62 and 65, and then we start resetting from there and rebuilding, and see if we can get that sort of that entry from a bit lower. Still positive on it because I think we found some nice support off here. We've washed out the anchor to this downtrend. It could just get stuck in a bit of consolidation between, or a bit of a range between 75 and lows down towards 60, 57.5. You don't know what's going to happen. It's just this recent price action I'm not a massive fan on. I don't like it. It took a lot of effort to get it up through 70, up to 75, bang, 3 days straight back down again. And it started, this wasn't strong price action, and we've got this little pop today. Okay, that might be the pop before we start rolling over, or who knows what's going to happen. So I'd be just putting this one on the back burner just for now. I wouldn't mind seeing a deeper correction and building from here. I just find that the weekly's getting towards overbought, the daily's getting towards overbought. So how much energy, if you bought it in here, how much energy, or how many people on the sidelines are left to buy and continue that trend higher? Anyway, see how that goes. A, B, C. Let's get to the weekly. Look, the weekly trend's up, looking good. Let's just draw that up. Adelaide, Brighton. There's a lot of stocks now. They just tend to be getting, for me, technically they look all right. It's just where the stochastics are has me second guessing. It's tougher to pick a more quality one. You can see that definitely that weekly's gone up since 2015, maybe earlier. You can see it's holding nice, excuse me, nice high lows. One thing to take note of, and this is with regards to that, this little clean out here. It's done it time and time again. I would say that's another clean out there. Here, again, the same sort of price action will pop up, gets a bit of headache, sells, comes back down, retests sort of that anchor level through here, build a lower height, cleans them out. So that might have got a lot of buyers who bought it in here on the back foot and then turn around, just retrade and come straight back up again. And that was pretty much that push down, started that new leg right up here. This push down started this new leg right up here. It might have been with just doing that same thing right now. Whether we do or don't, I don't know. I just find that this has probably popped up a bit too far for me. I wouldn't mind seeing it come back down and then building, just squeezing in here a bit more, contracting in here a bit more, because I think if we just break out through that high and you buy it on that break, your risk is going to be here. We're getting a bit too far away from the, so this trend line. Doesn't mean anything. It could just go blast up through 7, but definitely that weekly, it seems to be that history is repeating itself. That move up there, that pullback, that's repeating itself now. So if we get into the daily to get an idea, look, it could easily just blast up through 680. You've got your entry just up through these highs, especially if we do lift from here, and you've got your stop just below 646, and then just see how it plays out, especially the fact that this move up here is quite strong. We've gapped down, tried to fill that, well, we filled that gap. We've had a decent correction, blew out that low. On a daily chart, it doesn't look that inspiring. But when you put it in context of what's happened on the weekly and what it's done in the past, just what we showed here and here, it could easily be setting up for a new move. It's cleaned out this low, cleaned out the anchor, cleaned out a lot of these buys. Pretty much anyone that's bought it through here or bought it in here, it was looking good for a while. If they didn't close out, they would have been feeling a bit nervous here. And it might have just cleaned them out, wiped out a few stops. It'd be the ideal place to hold your stop, especially if you bought it in here, you edged into a position, hold your stop below that high, high low, around 630 or so. You got tagged there, and then it started to lift again. So that's just cleaned them out. Put them back on the sidelines. If you're really committed to this stock, you're probably looking to get back in for an opportunity to get out. You probably find that's an ideal spot to get in at 675. But either way, just keep it on the keep an eye on it there. You in that, Lauren, or are you just something just thrown up there for sake of talking? There's no reason. That's actually quite nice, mate. All right, what do we got? Murray BSL, uh, all FMG. Let's look at BSL. BSL's a cracker. I know Paul. Pretty sure he's still in this one. He's done really well on it. Nothing to talk about that trend there. The only thing I'm seeing, whether we're going to get a bit ahead of ourselves on the weekly, getting a bit extended towards the highs. It's a lot to ask for the market have this little pullback and then blast through 19 into new highs. It's starting to get ahead of itself. Absolutely great. Doesn't mean anything's going to happen. Doesn't mean fear, panic, whatever. The market's still it's kicking higher nicely. Going down to the daily, yeah, that's just a higher low. It's playing out nicely. So that higher low should technically lead to a break up through 19. I just think from looking at that weekly, and you can see the energy it's taken to get these last 3 days. We're going to be overbought soon. We're going to be popping in that overbought territory. And if we can't break through those highs, as opposed to this sort of action, we popped. Oh, look, we can hold overbought again. With respect to the weekly, are we getting a bit too far away from these MAs? This is all just. It doesn't mean steer clear of it. Doesn't mean close out. You've got to be proven wrong, and proven wrong, you probably if you had this even in here or in here, you'd be wanting to put your stop just below that, around 1650 right now, just to close it all out. So if you take that out, we might start to have a deeper correction on the weekly. Look, it's one of those funny stocks. Like it did here. It's popped up, tried to go, it's just gapped down. Boom. We've retested this sort of the anchor level, washed out a bit, but then we started building and we get the next leg up. And all this has started from this zone here back in 2017 at around $11. So not far off doubling your money, up about 80% there if you bought it off those lows. So it's looking good on the weekly. I'm just sort of questioning. That's just me. You probably haven't noticed. That's what I tend to do. Things look to me like they're getting a bit ahead of themselves. I don't like to get in here because I just get in the feeling that maybe we're late into the trend. I don't want to put too much risk when I could potentially getting into something that's earlier on in the trend. I'm always looking for something that's coming out of contraction into expansion. It's ready to expand higher. So you had that major contraction lower, or you had that major macro correction. When the market's popped up on a daily, it's had that macro correction on the weekly, and you're looking for a new weekly trend higher. When the daily starting to trend again, they're both starting to point up. That's where I'm looking to get in, as opposed to getting a bit late, probably in that weekly trend up. Either way, no reason to get out of this at all. It looks good, looks nice. What was the other one? ALL. Look, that's looking to me a bit along the same lines, especially after the last few weeks, 1, 2, 3, 4, 5, 6, 7, 8 weeks up, especially the last of it towards the end of that week, bang, up here. Wouldn't go near it as a buy just yet. I want to see some heat come out of that. If I want to be a new buyer up here, I'd have to have massively tight risk, and I don't think probability-wise, I think to buy into this is a low probability trade the way I'm looking at it, because it's come so hard off this long sort of this move through here. This was, and you can see traditionally it started to get a bit ahead of itself there, and it spends a lot of time sort of resetting through here before we had this expansion higher, really started to pop up again, overextended on the weekly. So you got to ask yourself, what sort of probability can you assign to this trade of kicking on higher? If you're saying to yourself, look, it's probably a low probability trade. If it's new, if you're just looking at it to get into, maybe step aside and pick something else. But if you're in it, it'd be interesting to see. Where most people see, where would people put their stop on this one? Is it Murray? Are you in this, Murray, or if so, sort of where from, I guess? Because for me, it's a tough one. Technically, you should have your stop below this low at 27.58, but the fact that it's gone up so hard here, I'm just expecting a correction. I could easily put it below that, say at 29.50, for example, get stopped out, and that secondary move down still holds that trend, and then boom, up she goes again. So that's what you got to bear in mind. How much you're willing to give up, and sort of what do you associate it to. I tend to type my stops right up when I feel that it's a lower probability trade, as in probability going higher, I think it's getting lower. So I'm happy to type my stops up. When I think it's a high probability trade where it's coming out of that correction, you're going back into expansion up, I'm happy to give it a bit wider room, bit more room to move. So if we're somewhere around here, for instance, and you bought it in here, or trying to think of a better, say in here, you're correcting, you're starting to hold, you're retesting the low, you're coming out, you're holding a higher low. I'd be happy to have a breakout here and put my stop down here. Just give it a bit more room. As it was, it kept you out of well, even if you had your stop just below that one, just below there, very tight, but it's kept you out of trouble. But I'd be more than willing to, buy a break through that high. Back at this stage, back in October 2017, what was the high there? High at 21.38. Keep my stop below 19.90, down here. Give it a bit more room because I feel if it does break up through here, you trade up to those highs, I get stopped out. Something fundamentally or seriously wrong with my trade setup. I'd rather be out than in. All right, FMG. Yeah, FMG is a tough one. You can't really look at that in the daily. The daily looks more rubbish than anything else. I wouldn't be buying this on a daily. I probably wouldn't sell it either if you were in, but you've got to, it depends where you're in. If you got in here, for instance, you got this little pop up here and it's looking good for a while. We bought it through here. Never went for us at all. And it's turned around and just proverbialed itself. It's got its pants pulled down a bit through there. But you can see that weekly. You can see that after that move up, this has spent a lot of time just cleaning out, especially the top 50% of buys in here. Probably clean them back out. Maybe when you got this good correction on here, they'll okay, we're going back up again. And this market's led to, or this pullback has led them to question themselves. At that stage, we weren't looking too bad. Discard, take that. Let's take that, that'll be right. So you can see that that was a support through here. It's just whether or not this move down has just washed them out, washed out that low, through down, towards the $4 mark. And this is a retest of that 450. But for me, it has to get up through not just 5, but I would expect it to get up sort of through that 550 mark to really, and you can't really, I'd expect, I want to see it up through 5, and I would want to see it up through 550 before I'm looking for my higher low. I wouldn't just take it on a break through 5 because it's come off here, because it could easily go up and roll over again. You don't know what's going to happen. It's probably not so bad. I mean, you can assign risk to that. You can see that is probably a washout there if you get that push up through 5. But whether we just start chopping and changing, because for me, that's the key level for your move down up at 550. Your key anchor, you got one swing level here, you got the highs up here, pull back, key swing level here, press down, another swing level there. It's a lower high and it's pressed down, washed it out. So I would want to see that broken before I'm really bullish on this for a move up through $7. If you were going to buy it up through 5, you could just pop up through here, retest it high, and then chop around a bit. You may stay in, but no one wants to buy something and see it just go up and down like a yo-yo, for the next 6 months while they're just wasting their cash. I mean, what if you get another capitulation in the US and we roll over, bang, that'll probably get stopped out just through fear. But we'll see. So either way, I'll be just keeping an eye on that. This overall price action after this leg up is not bad. It's just cleaning out a lot, so the top half of traders up here, cleaning them out, put them back on the sidelines, and they may be reassessing it just exactly like we are now. So I'm going to buy back in if it gets up through 5, another dip at this, that revenge trading mentality. Cool. Target of 40. Is that ALL, wasn't it? BSL. Target of 40. Is that on? I hope it's not BSL. $40. All right. If they put a target of $40, you're probably better off to sell. That's my enthusiasm for analysts. You're an analyst. You can analyze the market or you can trade it. Two different things. All right. Let's. What's the last one here? We've got 2 to get through. NWNRW. I just looked at that today. Why is it not coming up? NWH, is it? So I'm guessing that's the one, NWR Holdings, NWH. Charts, go back to here. Well, actually, it doesn't look too bad, to be honest. I mean, just look at the weekly. Oh, look, that it doesn't look. It looks good. Yeah, I think it's got a bit more work to do by the daily, and you can see we haven't broken up. For me, it's not. It could just consolidate through here, spend its time, below 145 and above 120, chop around in there. It's done one good thing on a daily, but it doesn't mean anything. I don't like to take too much note of those high lows until it's broken out a significant level, and it hasn't done that just yet. The weekly does look good, but this weekly could just chop around. I'd rather see. You can see the difference. If we just look at this quickly, now we have had a big leg up here. Just say that's one leg. Before we really got, and even through here, we didn't break down. It held the trend. It held high lows, high low in here, high low here. This led up to this new. We had a high low here right up until we washed out the high at 170. Come and broke that there. So now that for me is more looking to be a macro correction. If this longer term leg up, that's just on the weekly. Doesn't mean too much though. If you can see, we're just holding through that 120 and we're sort of capped between there and 145. For me, if I want to buy it, you can see that's more of a double bottom. It hasn't really built that high low yet. And I'd rather see a pop up through here. If you can see that, probably a bit clearer if I draw it properly. You get a big move down, pop up here, retested it. We've come back down. Now you've got this little blip in here, which led us to about here. I don't see that as a high low though, on the weekly anyway. I'd rather see it pop up through here. Whoop, change colors. Pop up through here and then come back, clean out a few of these late buyers, and then build your major high low. That's ideally what I'd like to see. And then I think you get a nice little risk reward trade. You offer double bottom, which has got your high low after your break. All those things to me say higher levels. And then I'll be looking up towards, through 170 if that's the base we get. So if that for me is to play out at least on the weekly, it's going to take some time. That weekly is in a good spot there. I mean, it could just blast up through 145 and off she goes. But I don't like it after. I don't like that playing out after this move down. I think it's got to do more work for me. But again, the daily actually doesn't look too bad. The daily's done it. So this is what could catch. I mean, if I'm right on the weekly, the daily could just be setting up to squeeze a few people because you have got that sort of price action playing out. That's your move. That's your anchor there. We've washed out that high. That's your anchor through there. And we've just broken that with this move down. Then what we've done, we have built the high low on the daily, but we haven't broken that level, which I was just saying. So this could just be people bought it on that breakthrough there. They've got their risk here. It could pop up here and then come straight back down and test 20 or 15 and continue within that range. Or it could get a few people stopped in when it breaks up through there. And then you get that weekly correction of what we were just looking at before. So it'd be interesting. Subscribe to Morningstar. No, we've got Morningstar on there. We've got actually Morningstar. Um, it's part of Spark. If you get, I can show you. Yeah, that's Morningstar research comes through Spark, the program. So we subscribe to Spark. But yeah, I don't take a lot of notice in that. It's not really. It's just the company profiles, not so much research. So yeah, that daily, I'm curious whether that's going to be a bit of a washout. You could just pop up through that high, clean out a few people, or could just retest fail from that 143.4 mark, only a few cents up from here. Because that's, if you're looking at it from a daily chart, you'd be looking at, okay, I bought that through that break, got my risk here, and you could potentially get cleaned up because it hasn't done too much on the weekly, and it's getting extended on the daily too, and it's kind of a good base on the weekly. So look, this one, I wouldn't be too adverse if you bought it through 145 and you have your stop below here, because the weekly is actually not so bad, and it could just prove me straight wrong. Bang, up through 170 and away we go. So yeah, I mean, that's the nature of trading, isn't it? Nothing is perfect. You just got to bear in mind what's happening in both time frames. So what are the longer term traders, what are short term traders doing, and try to weigh it up whether you want to, add some risk to this trade. All right, so it's NWR. All right, last one, we get on to main. Now that, you can see on the daily, we're just breaking up there. I wouldn't have bought that through that 80 cent mark. I mean, now that's going to clean a few people out. They bought it through here. They're going to have to sit through a bit of heat off that daily chart. But we flick it back to the weekly. And the weekly could just be, it pops up, and then I'll be looking for that major high low on the weekly chart. But this one actually is not too bad. I think we've had a look at massive correction here. If you piece all this together as well, let's get that up there. It's actually down in a fairly, it's not a serious zone, but it's sort of reacted off there previously. We've come into that zone, and there we've reacted up here. We found higher lows. We worked our way up to high low in here. We worked our way up, higher low, higher low, higher low, all the way up to 210 before boom. The poo has hit the fan. We built the lower high in here, but you can see that's just completely capitulated there. We've tried to have a go at it here. You can build it higher, low in here. That's dragged in a few people, and then boom, all the way straight back down to. And you can see that the amount of time it took to get there wasn't much compared to that. It's probably half the amount of time it took to get up from that support zone up to the highs of 210. That's a bit more controlled. You can see that move down was a bit more controlled than the first sort of part of that move down, or from here anyway. You see that's a boom, 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 all the way down. And this is, you can see that steepness of that sort of line through there. More control all the way down. We come down to support, but what we're finding now, we're just starting to lift. Got a pop up here, retest, pop up. It's more sort of rangy at the moment. Built your higher low, another higher low. It's taken us up through there. And this is probably exactly what we were just talking about. The daily, it's popped up, and it could just be dragging in a few buys. So I wouldn't want to get caught. I think for me, on the daily, the fact that you got your support down at 60, you've got this zone through here. It's range trading through, what was that, 6 months or more, sort of range trading through here. So for me, I'd want to see. So from now, I'd rather be looking at it for a potential trade. I want to see it pull back, build your high low, and if we start to look like we're going to go again, especially after we've broken up through 80, I think that's going to be a trigger to come on a lot of people's alerts on watch list anyway, and start to look at for a potential trade, especially after we've come down so hard from the weekly. And this move down, you'd expect at least some sort of solid bounce, even if it goes 50% of this move down, or you're heading towards 150 to retest this sort of zone up here. There's a lot of zones where it's got a good risk reward to it off these lows, but maybe you see how the weekly MAs are starting to converge at the moment. I think a lot of the times they can pop up above, and then as they start to cross, you get this pullback, and it just cleans out a lot of traders, and then that's where you want to start to look to get in off the weekly charts anyway. I mean, the daily, we've sort of gone sideways for a while. It's only the last few days we popped up. So I would expect this to pull back to build a higher low. And if it does build that higher low, it could be a nice little risk reward trade. We start to look to highs. Wouldn't want to buy off a higher low if we're still hovering around that overextended and the overbought zone on the daily. But look, we'll see how it plays out. But it's in that sort of daily zone where it could start to be building. And I spent a lot of time consolidate. Anyone that's wanting to still get out to sell up, it should have done it by now. That should have played out. So it's reset itself down here for me. It's spent a lot of time resetting itself down off that 60 zone, and it could be starting a new leg up. Even if it's a 50% retracement, we get way up here. Risk reward, that's awesome. All right, that's probably about it, guys. We might have to call it a day there. I hope that helped. If I have missed something, just shoot me an email and I'll get back to you. But I think we got through everything there, didn't we? All right. Yeah, all right. Thanks for joining me, guys. We'll call it a day. We're back in on Thursday. Um, I hope you all had a good few days. We'll see what happens in the US tonight, but just keep an eye on it. Um, in the US, if they do have a bit of a pullback today, we might have to just reassess again on Thursday what's happening with the charts. But if they start to hold, even over the next couple of days, by the time we hit the Thursday, you've had a couple of good nights and they've held on to those gains. The US could be starting to look at higher levels anyway. It's something we just want to see. I think every time they've had a 300-point rally, 200 to 300 point rally, they've given up the next day because no one wants to hold into that risk. Whereas I think maybe now we're just getting some more signs, um, or fundamental signs in the US on inflation that it's holding. And they don't forget was it the Fed Reserve said we're happy to hold slightly higher than usual inflation readings. Say 2 to 3%, sort of top end of that range. We're happy to hold that there without raising rates. So if that just sticks around that level, 2.5 to 3%, then I think it's looking good for equities over there, over at least short to mid-term, but we'll see. All right, guys, thanks very much. We'll see you again on Thursday. Cheers, bye.